All right. So here is the game plan for this week, February the 12th to the 16th. Um, the market has been on a winning streak for, I believe, 14 of the past 15 weeks. I think that is the longest period of time that it has had that many weekly and repetitive wins since 1972, if I am recalling that statistic correctly. So that means that I'm a little nervous going into this week and going to be clearing out of most of my positions at the end of each day or prior to the end of each day, but certainly not trying to hold anything overnight for fear of any type of bad news that will tip the apple cart, if you will, or cause the market to go in the opposite direction, go down as opposed to up. So just being super careful and risk averse here, but still looking for opportunities. So I think there are some great buys out there that are still within good price earnings multiples and are in, let's call it, stable industries. So Con Ed, which is a utility, is releasing earnings this week. If we look at the chart here over the last 6 months, certainly isn't near its peak of $94, $95, but it also isn't near its low back in October of last year, down in the low 80s. So we're in the 89 range here, and I think that there's a potential for it to dip into, let's say, 88, but then go up to 91 or 92, and that would probably be a good exit and give you a couple of percent of gain. The other thing to be aware of with Con Ed is if we look at more of the statistics here and down into the dividends, we're going to see that the ex dividend is February 13th here. So you've got a dividend coming, and as long as you own that stock on the 13th, then you're going to receive that dividend on March 15th. So that's something else that I'm cognizant of and aware of. The other one, obviously, that I'm going to go in and out of this week, depending on volatility, a couple of them. Chevron, I think sorry, not Chevron, Exxon. Exxon at 101, I think is an attractive buy. I think it'll go up to 103, 104, 105, somewhere in there. But it should have a little bit of volatility. All of that dependent on what crude does. So as long as crude is positive, doesn't have to be hugely positive every day, but as long as it's positive, I think that's going to help some of these oil stocks pop up a little bit. I love SLB as well. SLB in the low 47s, I think, is super attractive. Had a really bad day, down down 71 cents, which is a significant percentage in SLB in a day, and for no good reason. So still a very strong company, great results. I believe this as well has a dividend coming up. So if we look here at the SLB stats, what we're going to see, ex-dividend, it already had one, sorry, February 6th. So if you owned that previously, then you would have had that dividend coming shortly. But I like this stock. The price earnings is a little high, but certainly adjusted to its lower price here. It's dropped. Or it's coming down. I think you've got about a $2 play in there, 47 to 49, maybe $50 is kind of the range that I'm thinking. It could go lower. It could go to 45, becomes even more attractive there because I think it will pop. Valero's had a ton of activity. I mean, I just love this stock. I've done very well with this stock in the last couple of years with the volatility. And again, just look for patterns on the daily chart and see what's happening and buy in, and don't be afraid to get out when you reach a profit level that you're happy with. There's always opportunity to buy back in. If we look at MRO, I believe MRO, yeah, it reports this week. So I'm hoping for some positive earnings here. I can't see why we wouldn't have positive earnings with this company. So we'll see what they come out with. They are going to be announcing on it says 3 days, so it's going to be the 13th on the Tuesday. So we'll see what that has in store for earnings. This has been as high as 28. I don't think we'll get there this week, but I think there's definitely some potential. Again, still following crude and seeing what it does. Definitely going to keep my eye this week on Cloudflare, which is net. I don't think it's going to remain at the 110 level. I think it's going to pull back. And if it pulls back into the 90s, I think that would be an attractive buy. Yeah, I think all tech stocks have the potential to pull back this week, potentially. Airbnb announces results this week. Expedia came out last week with some bad results and dropped significantly. I'm not sure about Airbnb. I'm kind of on the fence and sidelines here. I liked it in the 130s. I think it might be a little pricey at this point at 18 times earnings. I use Airbnb all the time. I think in the long run, it's a solid play. We also see, I believe, Marriott come out with results this week, so that would be another one to keep an eye on. I love Microsoft, but it is getting to an expensive point. I'd look at maybe paring that down and waiting for a pullback to buy back in. I'm definitely following ARM this week. ARM and it had amazing results. This is a great long-term buy if you just want to get into this and just sit on it for a year or two. Um, but I think that it dropped down on the day after earnings. I think that was Friday, down to about 105. If it drops again, might be worth picking it up. I think it definitely will get back up to the 115 range, but I think you could see a pullback there. DraftKings announces, I believe, on Monday. I've been in this stock. I didn't make money in this stock. I got out. I bought it at the wrong time and just unloaded it when I was at a loss because it didn't look like it's going anywhere. It seems to have traction. I gotta say, I'm not a big fan of DraftKings. It does report this week. I think that there are a lot of other better stocks out there, ones that are in fact making some money and having some good cash flow and results. I think if we see a pullback, stocks like DraftKings will pull back significantly because they don't have profitability. Um, and then others to look at, Adobe, it's had some huge movements down in the 610 range and now up to 627. So again, on a pullback, I'd look at maybe picking up some of that and then selling it on a recovery. And then SoFi, still waiting to get in on SoFi. I think this has a lot of potential, but I think it's expensive in the $8 range, even in the high sevens. So I'm waiting for low sevens, high sixes. And I think we're going to see a pullback in that area as we move forward. Again, I'm staying out of regional banks. I do like M&T, but I'm worried about what's going on with New York Bancorp and the commercial loans. I think that's going to be an issue for a lot of these companies. So staying clear of those right now and just seeing how that plays out. That said, the big banks like JP Morgan, Goldman Sachs, and Morgan Stanley, they should all tend to do pretty well if the regionals have issues because they tend to buy the regionals at a discount. So that's where we are going into this week. I hope that